a UK share called Lion Trust Asset Management. And last year, we bought our first position into it at 780 down here. It went up and it pulled back into this range. And I added to it here and I added to it there and let it run up the page. I could have added to it here as well, but I didn't. Okay, so I bought my first tranche there, second tranche there, third tranche there. I was right, and I was right with 3 times as much as I would have been wrong with. And I used these pullbacks to the last old high to add to the position. No more complicated than that. So that's Avon Rubber. Again, in the UK market, we've got earnings per share rising, and it broke, came back. You don't have to buy the level, but I normally do simply buy the level. It broke, came back to here again, and away it goes. So again, from the initial position, 3 times bigger as it moves up. That's simply a sweet spot. That was a short. In a US company called Helen of Troy. And I think it's useful to put on moving averages. We want to buy the sweet spots with the moving average. That was a buy signal just there. I didn't get it at the level, but there was a big outside bar there. And it pulled back to that old top, and away it went. And then all of a sudden, in the sell-off, it went up and it kissed that low. It printed this red day, and it was a nice short there. Okay, I'd been stopped out of that, but good profit in it to start with. So very simple. Now the second and most useful Wyckoff technique is the upthrust in the spring, and I use this more than anything else. And let's look at the buy signal for a second. The objective of this, folks, is to find a trend and then to use these to get into the trend with virtually no risk, and then add as it moves. I'll show you examples of it in a second. We get resistance, which becomes support. It then breaks up, and that would be a sweet spot. It breaks up, can't make a new high, and then it goes back and takes out that low and then reverses. And that's the spring. And the upthrust is the mirror image of that. Support, resistance, can't make a new low, goes up, takes that top out, runs the stops, and then comes down. Now, this is not called a spring for nothing. When it goes, it goes. It is my favorite setup, and I use it all the time. That is, I can't remember what it is. It's the cable. And there is the cable now. It's an hourly chart, and there's no doubt that I also look at the daily chart for long-term trends using Fibonacci, but that's beyond the scope of this talk. But in terms of trend direction, I've been using an 89-day moving average for as long as I can remember. And if on the hourly chart, if the price is above 89-day, then it's good. Those of you that are share traders, if the daily chart on the share price on VectorVest is above an 89-day moving average, all is good. Now, there's resistance, comes back once, can't make a new high, comes back, takes that level out and reverses. That was the entry, or you could have bought the level itself, and that was the first entry into that cable long after this turn. And I added to it quite a few times up the page. I added just there. That was a sweet spot. Okay, so add it into this position as it goes my way. Now, you could trade this as an intraday trader, take a few points and leave. But the real trick is to get in, let the trend develop, then get in, and you're getting in with this amount of risk, and then let it run. Now you're getting in with this amount of risk again, let it run. So building a position, when I'm right, I want to be right with a huge position. When I'm wrong, I want to be wrong with a tiny position. And I have no problems admitting it might take you a day or two to see these. I don't know, they say the first 20 years is the worst, but after that, you can see them easily. So Once you've trained yourself to see these, you'll never look back. This is the Aussie, and there's resistance. It pulls back. I should have got that. I'll show you in a moment. I should have got that, but I didn't. I don't think I did. And it then breaks, comes back, kisses that, goes up, can't make a new high, comes back down, takes that level out, springs. And that's the setup. There was the risk. That's the reward. Okay. And I haven't been able to be profitable any other way. One has to be brave. Now, as you'll see in a moment, we could have been in down here as well. There was a lovely little candle pattern. It's called a multiple inside pattern here, which is rarely lets you down. Now, that is the dollar against the Japanese yen, and that is as of a few moments ago. I was waiting for an up thrust here. I was waiting, there's that support, goes up once, can't make a new low, and I was waiting for this to go up here, and it didn't, but then it charted an outside bar, so I thought I would have a go anyway, and it moved down the page very nicely. Now, on the daily chart of the dollar against the yen, there's a very powerful daily low down here. But that's a sweet spot. It went up, kissed that old low, and I'm short of that at the minute. We shall see. Those of you that use the stochastic will see the stochastic also showing reverse divergence. So initial position there, and I had an order in here, just here, because there was another up thrust just there, but the damn thing didn't give me the fill before falling, but this one did. All right, so I should be 3 times bigger, but at the minute I'm only twice as big on that particular position. That again is the Aussie. That's the trade we talked about a moment ago. And I added there, and then all of a sudden it fell out of bed. Now, you might see that I have that I'm looking, this has gone down a little bit further since I did this, but I would expect this to rally overnight up to here somewhere, and tomorrow morning if I see a short there, then I'll be shorting it up there, just simply under that low and that high. Very powerful level, so nothing much more to it than that. There is the Aussie again. First position was there. That was the first entry. I should have been long there, because as you can see, there is a old high there. Should have been long there, but didn't. That's the spring, and managed to get in there again. So that was the first, that was the second, that was the third. 3 times as big, and got stopped out under that low last night, somewhere in there. Should have seen the 78.6 right at the top, but didn't. Looking for a short on the Aussie against the dollar tomorrow morning, but I'm not going to short it now. The market is in fact trying to seduce me to go short at the lows of the day, and then it will promptly go up and stop me out. So no way, I've been around the block too long for that. That's the spring in a share, okay? I just want now to go into the stock market and have a last little look at some shares in the stock market. That's Avon Rubber. Now, the reason I'm looking at this share is that it's got a very high, at the moment I've advised all VectorVest customers to err on the side of caution and to only look at shares with outstanding fundamentals. And on VectorVest we have a metric called relative safety, which finds shares that have outstanding balance sheets, income, cash flow, and lots of cash to handle a downturn. Daily Telegraph this morning can't make its mind up as to whether the GDP contraction is going to be the worst since 1905 or 1720. Okay, and that's the front page of the Daily Telegraph this morning, and I may have got 1720 wrong. It might be 1730, but it's one hell of a long time ago. This market, that's the sweet spot. The market came back to there. Now, I didn't get that. As you can see, earnings per share growing really strongly indeed. That would have been a cracking level. As you can see, we got an old high, and the darn thing comes back to that old high. That would have been a great place to have got in. I didn't, but got in this, and I've been speaking about this for the last few weeks. Now, this is Polymetal. This is just textbook stuff. We get earnings per share is okay. It's a gold mine. Simple trend line. And if we draw in a fib from that low to that high, we can see that that was 61% of it to the tick. So we've got the trend line and the fib confluence, and the market just bounced off that and goes still very strongly indeed. So this Lion Trust Asset Management been a great player for us, and we've got this. There's earnings per share, and we've got the old top. We've got the trend line, and we've got fib all coming in together. If you were doing a textbook and technical analysis, that should be there. And this is what VectorVest is all about, to try and find shares with impeccable fundamentals, and then to give you the skills to get into them at an exceptionally good level. And I'm long of Lion Trust Asset Management from under £8 here. So that's quite good. This is Games Workshop. This is the share that I talked about. I was laughed at, openly laughed at by guys at the Traders Show. And there's the trend line. There's earnings per share. And there's the old top. That's the sweet spot. And there's the 78% retracement. Those of you watching, folks, or listening, 78 is the square root of 618. It's an incredibly important Fibonacci number. And if you come to my Monday afternoon meetings, you'll be listening to 78, because it's one of my favorite numbers, especially in the Forex market. The Forex market vibrates. So looking for a trend, and we're looking for one. The good trade is the hard trade. It didn't take any great intelligence to buy that market down there, did it? But it took a great deal of testicular fortitude to do it, I assure you. So the good trade is the hard trade. I fade, there's the long-term trend. I fade the short-term trend in the direction of the long-term trend. I put my entries where the masses put their stops. And I want to, in fact, to be right with many more shares than I'm wrong with. Now, I haven't actually added to this position as yet. My own feel is that the stock market needs to pull back a little bit first. The Daily Telegraph didn't give me a great deal of confidence today. That's JD Sports. Many people say they're not going to sell many shoes over the next week or two, but they sell a lot online. Earnings per share is impeccable. Came off these lows. We shall see. That's the GB Group. Again, you can see the theme here. Earnings per share, great. Support, 78% retracement, and it bounced off. That was incredibly noisy in there. It's been in a crazy period. That's Diploma doing the same thing. And those are some of the shares that I'm holding at the minute, folks. Shares with outstanding fundamentals, which VectorVest finds automatically. If I go to our viewers page, the stock viewer, and I resort by our metric relative safety. It brings those shares, well, when the internet is playing the game. Clearly this thing is Zoom contraptions taking a great deal of bandwidth. When I, in fact, click by relative safety, it brings those shares with the best balance sheets to the top of the list, and that's clearly not going to work. This Zoom must take a great deal.
No, it is. Yeah.
There we are. What I've done is I've resorted all of the shares in the market by relative safety, and that's bringing Avon Rubber, Lion Trust, Games Workshop, Pourvert, Cranswick, a great company, Crichton's makes hand cleaning stuff that's used by the NHS. It brings these shares with impeccable balance sheets to the top of the pile, and folks, that's where we want to be focusing, in my humble opinion, because over the next few weeks, when we come out of this nightmare, my grandfather told me a very long time ago that the objective of a recession is to get through it, and that companies that can get through it with cash will be able to pick up bargains for next to nothing. I like the look of Berkeley, the house builder, the London house builder, run by a chap I know reasonably well called Tony Pidgley, and he's got £1 billion sitting, and in 2007 and 2008 he also was in a very cash plus position, and he managed to go out and buy enough land at knockdown prices to keep them building for 10 years, and my contacts tell me he's doing exactly the same thing at the moment. So companies that have the cash to come through this will do exceptionally well. In the US, I have a watch list called Cash Laden tech giants. And for example, Microsoft has got 146 billion. It's got a very high relative safety number, $146 billion sitting waiting for acquisitions. And Warren Buffett isn't nearly. Warren Buffett's got 105 billion waiting on to make acquisitions. So Apple's pretty much in the same place as well. So those companies will be able to buy things at knockdown prices in a week or two. All those CEOs that spent all their cash buying back shares must be having a very poor night's sleep presently. So cash will be king for listed stock markets. And ladies and gentlemen, cash will be king for all of us until we come through this nightmare. I think the main thing is to take care of ourselves. And as Boris says, to keep washing our hands every few minutes.
David, you're absolutely right, and I think that can bring us to a wrap. The incredible information that we shared, because we started from your background and the theory, and you showed us on the screens how we can actually use all that theory to practice on the screens to capture the moves that are happening. So you can really see that the theory is working in real time, and I think that is the purpose of Traders Talk webinars, to show you real traders who are making real profits in real time with consistent performance. Thank you so much for your time today, Paul. It's been a pleasure.
Oh, it's a pleasure to be here, sir. And I'm sure I'll see you at a trading show in the near future when they get back running again. I see Master Investor has been postponed to December.
Yes.
And the other show that we were going to go to, Mellow, has been postponed to September as well. So there'll be a flurry of them towards the end of the year. So as long as everybody stays safe and take care of ourselves, it's a
Exactly. And thank you so much for your time. Thank you to everyone for coming today, and always towards the truth of trading. Till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Thank you, everyone.
Cheers, everyone. Bye-bye.
Thank you.